Good morning, good morning. It is Thursday, 7:31 a.m., October 13th. Finally, we have arrived to the day that the investors have been waiting for. Core inflation rates, CPI data, is coming out at 8:30. We've had dog shit price action as, oh, let me just take off that alert here. All right, yeah, so we've had dog shit price action all week, Monday, Tuesday, Wednesday, as markets have been ranging, indecisive, choppy, low volume and volatility, when the fact of the matter is most investors are waiting on the sideline, waiting for this inflation data to come out because it's very important. Everyone is waiting to answer the following question. Have the current interest rate hikes by the Fed have had any effect on the inflation rate or not? So the Fed has aggressively raised interest rates. Now, there's no signs of inflation peaking or even dropping or easing for that matter. Now, today is going to answer that question. If inflation comes out right here, inflation rate, if the year over year comes out at 8.3, which was previous, consensus is 8.1. So if it comes out at 8.3 or higher, that means that inflation rate has not dropped at all. If we have if inflation rate, let's say, I would say anything above 8% on inflation rate means that whatever the Fed has done has not mean shit. It has not done anything yet. So if inflation is still above 8%, and even core inflation above 6.3, that means this is going to be extremely bearish for the markets as as the Fed's going to have to be even more aggressive and raise rates even higher. So this is a very important data point here. However, if the opposite is true, if we are seeing a drop and we're potentially below 8%, somewhere around 7.8, 7.9, which is still very high, but on the short term, this is going to be taken as optimistic. So if inflation drops, if the inflation number gets lower, then we're going to go see markets have a rally. Gold's going to go up. Stock markets are going to go up. Any risk currency is going to go up. US dollar is going to continue its path down for the short term before inevitably the Fed's going to say, hey, 7.8%, 7.9% is still way too high, still work to be done. We're going to get the continuations of US dollar strength, and then equities are going to continue their way down. But it's important because it's going to dictate the short-term sentiment. Whereas if we have higher than expected, or basically right on consensus, it means inflation is way too high still. US dollar is going to pump to the upside. Stock markets are going to go down. Gold is going to go down. The pound, any risk asset's going to go down. And we're going to see the overall sentiment come into play as the Fed is going to get more and more aggressive and for longer. Right, so it's very important data here. Now, having said that, let's look at the US dollar. The US dollar is still within this shitty range here since the beginning of the week, has not been able to break above this previous level of sell-side liquidity. And basically from our bullish price action from last week, printing new higher highs, breaking past this pullback structure, we have failed to move anywhere here as we're just grabbing liquidity, being indecisive, waiting for CPI data. So now we see we're starting to get some easing of the US dollar here. Now, we're an hour away from the data, so we could end up getting a liquidity grab. And then if inflation data is high, then the US dollar is going to pump from better price levels, which is the previous highs right here, where we've rejected before this week. So we may end up seeing a price grab here to end up continuing to retest the highs. So if inflation is high, we're going to end up rejecting this level, breaking above this level, and continuing our way to the top. If inflation is lower than expected, but still high, so within the high 7%, which I don't think is going to happen, but if it does, we may see a deeper pullback on the US dollar, maybe to retest our next key level, 111.7, before the Feds come in and say, oh, it's way too, inflation is still way too hot. This is not enough information for us to change the course of our rate hike path. We must continue to be aggressive, yada, yada, yada. We're going to end up rejecting this level and continuing to the upside, creating more bullish structure and continuing our way up. So real quick, we'll see equities are so far actually in the green right now, right? So we're almost at 1% on the US 30, US 500. However, it's the NASDAQ is lagging. So usually the NASDAQ is, if the US 500 and US 30 are in the positives, usually the NASDAQ is higher. It's even more positive here, but it's lagging. So this could be an actual sign of weakness, in my opinion. So again, it's playing the current US dollar weakness here. We see US dollar is down against its peers here, mostly down against the pound, 1.4% down against the pound, as the pound is extremely strong here, ripping across all its currency pairs. As there's still a repricing, as the Bank of England is now supporting the economy, which is markets are taking as positive. So we're going to ride that wave for the GBP. And the yen is also, it's pretty flat, except for the pound, which is just dominating right now. So, but this is subject to change. These current levels are just going to get, completely reversed or explode even further once the CPI data comes out. USD crossing 1680. So let's look at gold right now, actually, since it's coming up to one of our key levels. Actually, we just skipped by the equity sentiment. We're going to do this real quick. So equities are still within the same range as VIX is near the highs. And equities from the bounce, we faded out the bounce, retested the lows, and have been ranging here. We're seeing a little bit of strength off the lows, but again, once the CPI data comes out, we could have an explosion here before coming to the downside, or we may end up just completely shattering this level and printing new lower lows within this session here. So still within this range, and just indecisive right now. So gold here, these are the same trade ideas from Wednesday, just because yesterday has had absolutely zero volume. As you can see, we just traded sideways. So let's look from the higher time frames first. Now we see on the daily time frame that we're still respecting this bearish structure here, as we're consecutively printing these lower highs and lower lows. Now, most recent price action shows sellers coming in from the 720s, 1730s level, previous lows, and coming down, printing new lower lows around 1620. Now we've had a pullback, an aggressive pullback, but it did not print any significant higher highs. We've actually came back to retest the same sell side liquidity zone and started fading out the move here. So from this low, we stalled out and we're having a little bit of a pullback. But as long as we don't break back above these lows, this pullback is going to get faded out as we continue the overall move here. So for me to be convinced that current price action, the current strength from the last couple days here is going to stay is we need to break back above these previous lows and start making our way back to these highs here, back above 1690s and 1700 levels. If we stay below those key levels, see right now we're at 1682, but if we stay below 1690s and 1700s, this will end up getting faded out, especially if we have high CPI data and the US dollar strength comes back to the table here. So I'm not convinced yet that this is a support. We're going to come back to retest the highs yet. No, it all depends on gold, who is now retesting these significant levels in the market here. So on the 4-hour, we're still respecting bearish structure on the 4-hour. However, we are starting to stall out here. So if we see from this pullback structure, we created this high, higher low, new higher high. From this higher high, we had a double top sell side, buyer exhaustion as sell side liquidity comes back in at these previous levels. 1720 is the higher time frame level that we identified. We had the weakness come down to retest previous lows. From here, we've had consolidation, right, as markets are just waiting on the sidelines. Right now, we're at an important level, potentially retesting this previous resistance area, which was basically the top of the range here, and top of the sell side liquidity here that we had a bunch of reactions before. Now we're retesting this again. We might end up getting the sell-off here if we fail to break this level and we have confluence with the inflation data as well. Now looking at the 1-hour time frame here. So I've identified, these were the trade ideas from yesterday. So these are still active since we're still in the same trend here. We're still in the same structure. So if we fail to break this current level, which is this weekly break of structure, we could end up getting sells back to the lows here. And if we come up a little bit higher, I'm looking at the 1689 region as the next sell side zone. And obviously once we break back below this key support level around 1660s, then the sells are on as well. So those are pretty much the passive price here. If we have some exhaustion, shift of structure, we could end up selling off here with the positive data. Or actually, well, the higher than expected or the consistently high inflation data will sell off. If we have some short-term optimism, we could end up getting a deeper pullback, grabbing some liquidity around the 1689 region before selling off. Or yeah, I mean, these are, if we start breaking back above this level, then short-term buys could be in order. I'd be careful at this level. We may end up getting rejections here, but we could potentially, if there's enough optimism with the data, we could potentially retest the higher time frame liquidity zone prior to the big sell-off here, right? So these trade ideas are subject to change based on the CPI data and price action. Right now, I'm not going to jump into the sell idea. With such important data to come out, I could just get slapped out. It's more of a gamble right now. I'm going to wait and see what happens before taking any position. Because so far right now, the pullback structure is bullish. We are retesting higher time frame, potential sell side zone, but current momentum as US dollar is bearish here on the short term. We may end up seeing this continue to further break to the upside, grab more liquidity prior to the sell-off here. So can be cautious, going to take my time. And the pound's just ripped it here. So we had the sell idea to sell at this level here. This is now invalid as the pound has just been extremely strong. So let me erase all these levels here, and essentially we'll start from scratch here. Quickly on the daily time frame, we have been into we've been in this bear structure as US dollar has been dominated and the pound has been extremely weak. However, from these lows, we had this pullback into this previous sell side liquidity zone, and we started to reject and start fade out this move. But we only recovered probably 50% of the upside move here. So this upside move only corrected 50%, and we started getting buyers step back in, and now we're getting an aggressive move to the upside. So based on the daily time frame, it's very possible to get deeper pullbacks if the buyers continue their strength here, where we may end up getting prime sells again from this same exact zone, where we may end up getting further downside here. So I'm not going to be in a rush to sell right in the middle of the range here, unless we have more fundamental confirmations with the CPI and US dollar coming back into play. Then we could, validate this being a lower high. But right now, it's much too bullish to sell at this level, regardless of being in this sell side bearish structure here. So we're going to have to dissect the chart on the lower time frames. Now, as we can see, this key level is starting to break. So now if we have a 4-hour close above this level, well, at this point, that's going to invalidate my sell idea, and I'm going to end up waiting on the sidelines, waiting for that further pullback, as I was mentioning. Because if we grab liquidity here, buyer stepped in, and the pound is starting to get bought up, we're breaking past previous lows here, then we may end up getting further strength as we continue this bullish trend, and to retest better sell side levels, potentially back up at this level. But for me to take any sells here, I would need further signs of exhaustion, and that's not likely to happen in this trading session. So I would much prefer to see this reject and potentially create a lower high below previous highs before taking the sell-off, and even safer sells once we break past below this previous support area, and then retest to get the confirmations of continuation to the downside at that point. So right now, I'm in wait and see mode as we're just printed these new highs. Overall bias is still bearish. We're going to need to wait and see and evaluate the data, evaluate the price action, evaluate the investor sentiment, and then position myself accordingly, and potentially just wait for better setups and structure. So far, gold is rejecting this level. So I prefer gold for taking sells if we're going to maintain below this level, given the pound is extremely strong relatively today, and we are actually breaking into bullish structure instead of respecting this bearish structure here. So I prefer gold since my bias is bearish and the structure is validating my bias. I'm going to be looking for sells on gold today, of course validating the inflation report.